Tech wreck on Wall Street. Most of the big names in technology in bear market territory right now. Facebook down in the pre-market this morning again, 5.75%. The company hammered by bad news lately. It is down another 1.25% right now, extending that 5% decline for the week. New York Times detailing an article how CEO Mark Zuckerberg allegedly ignored warning signs that the site was being used to influence the election. Reports also out on how Zuckerberg has his company on high alert and ready for war after the negative press hit. Here now is LJH Investment Advisors Managing Director, Media and Entertainment Analyst, Larry Haverty, joining us this morning. Larry, it's good to see you. Thanks so much for joining us.
Hi, Maria.
First, your thoughts on Facebook. What's your reaction?
Well, I think there's the business in the stock, and the business needs a fair amount of repair. Maria, it's very, very clear that the trust factor, which is absolutely critical in a business like this, has been wounded. That's the bad news. The good news is that I think it's fixable, and I think here in Facebook, basically, you have a situation where you have dual-class stock, so that Mark is really the key mover and shaker here. It's unclear whether there's a lot of external influence on Mark's decisions. I think at the end of the day, he's going to do the right thing. And I think from the stock point of view, the way he's going to do the right thing is to, in fact, add a lot of people and spend a lot of money. And I think when he announced that he was going to do this about 6 months ago at an earnings call, I think the stock became very, very difficult to own because no matter what you think, tech investors don't like margin compression.
Right.
So we've had a lot of price correction here. If you take yourself and put yourself on a desert island, this stock is now no more expensive than Coca-Cola or Procter & Gamble. And in my opinion, it's a lot better business. It's more global than even Coca-Cola. And it has basically zero cost of goods sold because the users make up the content. You don't get a product when
but we don't know what's coming, right, Larry? I mean, we don't know what's coming in terms of regulation, in terms of new fees, in terms of the pressure that this company might face. Steve, how do you see it?
Well, the pressures on regulation are going to be very real. But, Larry, you mentioned hiring people, doing the right thing. Can you get a little bit specific about what Facebook should do? People feel that a lot of people feel it's a tired product now. And so what does he do to jazz it up again, make it an attractive stock?
I think there's a couple things, and they're all going to be painful. I would like to see someone externally come in a supervisory position of considerable import, more or less like what Google did with Eric Schmidt. I don't know who they would get.
So you don't want to see Zuckerberg at the helm, then? You don't want to see Zuckerberg stay as CEO?
I think Zuckerberg needs a senior counselor. He's going to stay at the helm, Maria.
Yeah.
You buy the stock. That's the way it's.
And he's got voting control, so nobody's going to tell him to leave, right?
No, he's going to stay there, but that doesn't mean that he shouldn't have somebody blowing in his ear like Eric did with Sergey and Larry to the great benefit of the shareholders. That's the first thing.
Yeah, that's one thing that you mentioned yesterday, Dagan.
Yeah, one other thing I'll point out is only about a couple of months ago that the co-founders of Instagram being the growth engine at Facebook, very critical. The co-founders, Kevin Systrom and Mike Krieger, they laughed because Facebook was trying to remove the autonomy that they had in running Instagram because, again, maybe they want to foul up Instagram the way that they have the rest of the social media platform. But, Larry, I don't know if investors have fully factored in what this means for Instagram in terms of those two founders and leaders leaving in September.
And they're getting rid of these bad accounts.
Right.
Yeah, that can't be. It can't be a positive. But all of these things, you have two things. You have the business, and then you have the price of the stock. And the price of the stock is down at extreme low levels. Now, the other thing that Zuckerberg and the board need to do, Zuckerberg in particular, they need a massive share repurchase. This stock has I guess, $40 billion. I don't know exactly what the number is, but billions and billions of dollars of net cash. There's no financial leverage in the stock at all. The numbers are compelling for the stock to be bought by the company, and they've never been an aggressive share repurchaser. They need to do that. So I think they need somebody from outside to come in, a la Eric Schmidt. I think you need a massive share repurchase. And then the last thing that I think they need to do, a lot of the employees who are really critical here have lost a lot of money, Maria, because this stock is a large part of compensation for those employees.
Yeah.
And one way or another, they've got to be made whole, and that's going to cost the shareholders a lot of money, whether they like it or not.
Yeah, by the way, the company said in the first quarter earnings report that cash and equivalents rose to $44 billion. That was for the first quarter report, just because you said you didn't know the number.